A billionaire just made a crypto prediction that could change everything. He claims the move isn't random. It's planned, calculated, and already in motion. He warns us to strap in because the next 18 months are set to be the most explosive period ever witnessed in Bitcoin's history. What does he know that others don't? And why does he believe Bitcoin could surge toward an unprecedented $500,000 per coin by 2025? This is a forecast that could redefine wealth and the very foundation of the digital economy. The clock is ticking, the stage is set, and the world is watching. Let's meet the man behind the prediction, Chamath Palihapitiya. A billionaire investor, serial entrepreneur, and one of the earliest public advocates for Bitcoin, Chamath's voice carries weight on Wall Street and Silicon Valley alike. Back in 2020, when Bitcoin languished near $7,000 and skepticism was at an all-time high, Chamath was one of the few who saw the coming storm. He predicted the bull run with uncanny accuracy, calling for seismic shifts in the financial landscape. And he was proven right. Now, as we face a new market cycle, Chamath is doubling down with a bold new forecast for 2025. But this time, the charts, the data, and the global macro environment are all backing him up. Chamath's vision isn't just gut instinct, it's rooted in history and hard numbers. To understand his conviction, we need to look at the heartbeat of Bitcoin's price, the halving cycles. Every 4 years, Bitcoin's code triggers a halving event, slashing the rewards for miners and tightening the flow of new BTC into the market. After each halving, the story is the same. Supply shrinks, demand grows, and prices erupt. Let's rewind the tape. After the first halving in 2012, Bitcoin's price multiplied by 45 times. What started at just $12 soared to over $1,000. In 2016, the second halving saw a 28-fold increase, lifting Bitcoin from around $650 to more than $18,000 by the next major cycle. The third halving in 2020 brought another surge, this time an 8-fold climb, driving prices from below $9,000 to nearly $70,000 at the peak. The pattern is clear. After every halving, a new wave of demand collides with shrinking supply, and the price rockets skyward. With the most recent halving having just occurred in April 2024, the stage is set for another breakout. If Bitcoin were to repeat even a fraction of its previous cycles, we could easily witness prices in the $200,000 to $500,000 range per coin. Even if the magnitude of gains diminishes, the numbers are staggering. History doesn't repeat itself perfectly, but it does rhyme. And right now, the echoes are getting louder. But history alone isn't enough to trigger a price explosion. It's a confluence of factors: supply-side tightening, institutional adoption, and most importantly, a flood of capital waiting to be deployed. Consider this. Over $7.4 trillion US dollars is currently parked in money market funds, earning modest yields and waiting for better opportunities. This is the highest amount ever recorded. An ocean of capital sitting on the sidelines, biding its time. Why does this matter? Because as interest rates begin to fall, the safe harbor of money markets becomes less attractive. Investors, big and small, will start searching for higher returns, and that's where risk-on assets like Bitcoin come into play. The approval of spot Bitcoin ETFs on major exchanges has opened the floodgates, making it easier than ever for institutional money to flow into digital assets. Pension funds, endowments, and family offices, once wary of crypto's complexity, now have simple vehicles to buy and hold Bitcoin at scale. It's not just traditional investors getting ready. Stablecoins, digital dollars that move at the speed of the internet, are rapidly becoming the backbone of global liquidity. They make it seamless to move capital into and out of Bitcoin, further greasing the wheels of adoption. At the same time, new regulatory frameworks are providing clarity and confidence, giving big players the green light they've been waiting for. So, why does Chamath say, strap in? Because he sees a perfect storm forming on the horizon. The U.S. Federal Reserve is under mounting pressure to cut interest rates. Inflation fears are receding, and the global economy is slowing. History tells us that when the Fed pivots to rate cuts, the velocity of money, the speed at which cash moves through the economy, increases. As the cost of borrowing falls, investors become more willing to take risks, piling into assets with higher upside potential. Chamath's message is clear. When the rate cuts begin, the floodgates will open. Money will rush out of low-yielding assets and into vehicles that can deliver exponential returns. And in this environment, Bitcoin becomes the free trade, the obvious choice for those seeking outsized gains. But Chamath is no stranger to risk. He cautions that while leverage can amplify returns, it can also magnify losses. This isn't a time for reckless bets, but for calculated, conviction-driven moves. The data supports his view. Long-term holders, those who have weathered the storms and stayed committed to Bitcoin, are increasing in number. The amount of Bitcoin held on exchanges is dropping, signaling that more investors are locking up their coins for the long haul. Supply is becoming more limited by the day, just as demand from new sources is surging. Meanwhile, the global M2 money supply, the total amount of cash and liquid assets in the world, is rising rapidly. Every time central banks print more money, the purchasing power of traditional currencies erodes. Bitcoin, with its fixed supply and transparent rules, stands in stark contrast. It's a digital fortress against the tides of inflation and devaluation. All of this points to a simple, powerful conclusion. The conditions for a major Bitcoin rally are falling into place. This isn't financial advice. It's data-backed insight from one of the sharpest minds in the game. Chamath's track record speaks for itself, but the real story is in the numbers. The world is awash with liquidity. The supply of Bitcoin is more limited than ever. Institutional adoption is accelerating. Regulatory clarity is improving. The macro environment is primed for risk-taking. If you've been watching from the sidelines, waiting for the right moment to enter or scale into Bitcoin, this might be it. The next 18 months could be the most pivotal period in Bitcoin's history, a time when fortunes are made and the rules are rewritten. The window is narrow and the stakes are high. So as Chamath says, strap in, big moves are coming. The pieces are in place, the players are ready, and the countdown has begun. Whether you're an investor, a skeptic, or simply a curious observer, the next chapter of Bitcoin is about to unfold, one that could reshape the financial world forever. The only question left is, will you be watching from the sidelines, or will you be part of the action? As the market evolves, remember that volatility and uncertainty are part of the journey. No one can predict the future with absolute certainty, not even the billionaires. But by studying the past, understanding the present, and preparing for the shifts to come, you can position yourself to not just survive, but thrive in the new financial era. The time for indecision is running out. The next wave is building. Get ready for what could be the most exciting ride in Bitcoin's history. Strap in. The future starts now.